Okay, guys, we're gonna do VeChain. This is pretty new to me. I've actually never traded it, and my guys on my team have been pointing it out. We're doing a little bit of research on them, obviously here included in this another day in the 100. Uh, it seems like to me these guys are gonna be competing with Chain a little bit. I love the fact that, I mean, what the blockchain can do as far as helping these companies that, for instance, they're already working with Price Waterhouse Cooper, etc. These auditing firms. It's a perfect match for the blockchain. I mean, this is the Internet of Things. These RFID chips. This is definitely the future, and the fact that I'm amazed they're already saying that this is going to be a mandated um, technology and token within the city they're building in China. Um, I can't pronounce the city, but let's look at the coin here. So I've missed obviously all this run, but I really like the stability in this chart. You don't see a big spike followed by a big collapse and then just zero capital formation. This is a steady rising trend. Um, I mean, this isn't trading for pennies. I mean, this has already gone from basically where it broke out at underneath $1, went to 10, almost 10x, and then took a breather. You basically retraced back, $3-4 is basically a little bit over the midpoint of this move up. So that's pretty typical. This would have been a great area to add longer term. You should have been taking profits into this push, this push. You could have added back here, add back here. And now let's hope we can get a retest down here. Now, this daily cycle is coming a little bit low. I want to start with a higher time frame though, just to stay with the process. So here's the life of this token. I like it. I like that you can do it versus Tether. It looks like on uh, HitBTC you can chart it versus the dollar. So that's good. I mean, it's this is the fifth month it's been trading as far as I know. I'm just going off of these charts here, this data. So here was the base, the breakout, and you're having a 1 month reaction. But again, like I said, this if you look at this as the entire move up, you pull back about halfway. That's a great place to start a position. Obviously, there's no data there to do any kind of cycle work. We can see this breakout here on the weekly. Let's see how many weeks up this is when it really broke. So the previous high after the ICO is around 50 cents. You take that out. And 1, 2, 3, 4, 5, 6, 7. That's basically close to 8 count. 1, 2, 3, 4, 5, 6, 7. Yeah, 8. 8.6 is a frequency that we talk about. The global business cycle is on 8.6 years. You count from this candle. This candle kind of broke above the swing line on this prior basing period. So that was 9 candles up before we had a major high. And then a 3 candle reaction, that's pretty common. 2 to 3 bar reaction in a strong bull market, and then you resume the rally. Not a lot of data here on this weekly cycle. I'm not going to pay too much attention to it. I like what the daily's producing better. And this is just a nice looking chart, guys. This is something that's going to have my attention and focus for sure. I'm going to be starting a position back here also. I'll tell you why. So this is the higher lows. These are the higher lows that mattered. We couldn't hold the bands. You technically took out this low. And then a lot of times this will happen, guys, in markets. You see these intraday wicks. So what you're doing is you're running the stops, and the market will like to go where the most pain is, and it'll push, it'll stretch people, and it pushes further than you think, and then it snaps back. So not surprised that you took out these lows. You probably ran some stops and then you came right back up. So what's key to notice when you do that, let's say you were long from up here and then you stop out. I never like to completely stop out, especially on an intraday move. But let's say you took half of your position off, you waited, and then the market closed higher. Once you take out the candle that you stop out on, whether it's this one or this one, you can always re-enter above that candle's high. It's a good kind of rule of thumb. I sometimes call it my 2-strike rule. But that was an event where, yeah, it makes sense. You cut the risk in case you collapse all the way back to like $1. Then you could have, if you're tight with your risk there, you can re-enter lower, save yourself another really painful drawdown. I mean, from $4 to $1 or 4 to 2 is another 50-80%, drawdown. You don't want to sit. You can't survive and sit through those with those kind of drawdowns. So let's say you do cut your risk, you can get right back in. This is a bullish engulfing pattern also in our model. And then you had another nice run. But anyhow, so you made the higher low, you broke it, but then you recovered. So you ran the stops, you came right back up. So this basically held this area. Didn't do it intraday, but it did on a close. So that keeps that long-term bullish. You got above this intermediate term swing line, basically here, and then again here. That kind of set off this, probably another 8 count. 1, 2, 3, 4, 5, 6, 7, close. Seven candles up. Topping tail. I mean, if you were buying here, you needed to be taking profits there for sure. Create angle and distance, but then you get a topping tail, and then we've been resting again with this down cycle. So this is actually a good spot to start building back into a position. What you want to anticipate is another higher low relative to here, because this isn't an uptrend. That's what these markets will do, is make higher lows. You don't want to buy a higher low as like up here aggressively, or I think that this is a higher low. You want to do it near the bands. But anyway, that's pretty bullish. So you guys can join our real-time alerts product if you want updates on this one. I'll just say real quick on the 4-hour. You've been in an uptrend. I like that pi is rising. It's not so much that, hey, am I above or below the line? Is what's the direction of the line? Is it rising? So this looks pretty good. Looks pretty good. I want this to pull back, so I'm happy for this to come lower. And I'd say any kind of big picture core positioning on the long side, your risk is definitely going to be below 260, 250 now, below this low. So you can figure out your risk. You can work into a position with that being where you're wrong. And so that's a good way to trade out, to plan out that trade.